Something big is happening with Bitcoin right now, but it's not coming from traders. It's coming from one man, and what he's doing could change how people think about Bitcoin completely. Michael Saylor is back, and he's not slowing down. In fact, he's signaling even bigger Bitcoin buys are coming. But that's not even the most interesting part, because now he's introducing something new. Semi-monthly dividends backed by Bitcoin. Let that sink in. Instead of paying investors once a month, he wants to pay them twice a month using a structure tied directly to Bitcoin holdings. The yield is around 11.5% annually, which is not normal, and it's not random either. What Saylor is doing here is turning Bitcoin into a yield-generating asset. That's a massive shift because traditionally Bitcoin has been seen as a store of value, something you hold and something that goes up over time. But now he's trying to turn it into something that produces income, and that changes everything. Because if this works, you're no longer just holding Bitcoin for price appreciation, you're holding it for cash flow. Now here's where it gets even more interesting. To fund all of this, Saylor is continuing to raise massive amounts of capital. We're talking billions. His company has already bought over $2.5 billion worth of Bitcoin recently. They continue to raise money through preferred shares to keep buying more. That creates a feedback loop: raise money, buy Bitcoin, use Bitcoin to support investor demand, raise more money, and buy even more Bitcoin. And right now that machine is accelerating. But there's a catch: this only works if Bitcoin keeps going up. Because those dividends still have to be paid, and if Bitcoin stalls or drops, that pressure builds quickly. So what you're really looking at here is a high-stakes bet. But if it works, it could change how institutions view Bitcoin forever. Because now you're not just buying an asset. You're buying an asset that can potentially generate yield. Now zoom out for a second, because this ties directly into where the market is heading. As Bitcoin gets more institutional and more capital flows in, the structure around it starts evolving. And that's where something like Bitcoin Hyper comes into the conversation. Not financial advice, but we've been mentioning it because it's focused on improving how Bitcoin actually functions as demand increases. From what I've seen going through their white paper and site, the focus is on speed, scalability, and usability, basically building around Bitcoin so it can support more activity as adoption grows. And if Bitcoin is moving toward becoming a yield-generating, institutional-grade asset, that kind of infrastructure becomes more important. It's also been getting attention across major platforms like Bitcoin.com, Bitcoin Magazine, 99 Bitcoins, CoinMarketCap, and others, which usually signals growing awareness. Right now it's still early, and early positioning is where a lot of the upside tends to come from. Now of course there's risk, you can lose everything, so always do your own research. But if you're navigating markets like this, execution matters. Because when institutional money starts moving at scale, things can change quickly. Personally, I prefer using Solana when possible because it's faster and cheaper, but Ethereum is still a solid option as well. And using something like the Best Wallet app just makes everything easier. You can manage assets, move between chains, and react quickly without unnecessary friction. And when opportunities show up, that speed matters more than people think. Bringing it all together, this isn't just another Bitcoin story. This is a shift in how Bitcoin is being used from a passive asset to something that could generate income. And if that idea catches on, this could be one of the biggest changes we've seen in the space. If you want more breakdowns like this, make sure to follow, and we'll be back with more soon.